Good afternoon, ladies and gentlemen, and welcome to this week's trade review and live trading session. So the choice has been to have a look at non-farm payroll, which is obviously occurring in the next 8 to 9 minutes or so. The noise in the background is CNBC, just so that I can keep an eye on the numbers as they're coming through. I have one position open, which is a gold position. I probably would have liked to have closed it by now. I've been to break even a couple of times, once overnight, and again once this morning. I haven't taken those opportunities and probably am wishing that I had done. So gold is trading off a little bit. I'm long at 1793 from yesterday. It's currently down to about 1789. So we'll see how that one develops. The volatility, the big movements are going to come with gold and with the indices. I personally think this jobs number is going to be the most confusing one to date. I have a limit bid in the Dow, about 90 points away from where we are now. I'm not going to trade actively around the number. The estimate that we have for the jobs, the jobs that are added, somewhere between about 442, 446 thousand. 422 to 426,000 versus an increase of 210,000 last month. But I think there's some real difficulties around how the number will be interpreted, what that's going to lead to from a Fed perspective, and whether the number is good or the number is bad. There is an argument, I think, for the market to fall, and the argument for the market to rally is a little bit more contentious, but that's not a guarantee that this market is going to fall. We are trading fairly close to the lows that we saw yesterday. So these are the lows that we've seen for some time. As I look at it, a test of 36,000 seems a distinct possibility. But there are also we're also looking at an extremely robust economy and investors who are still looking for opportunities to buy into these markets. So it may well be that we see an initial sell-off and then have a further movement from that point. What I can guarantee, almost guarantee, is that we will see two movements. So we're going to see a movement now after the numbers come out, and we're going to see some volatility around that movement or that number. And then we're going to see another movement around 2:30 when the equity markets start trading. So keep an eye on gold, keep an eye on the indices. The other thing to look out for, of course, is the 10-year bond yield. Spiked up the other day to 1.7%, and obviously indicates, as we see these spikes in the 10-year yield, indicates that the rate increases that are well planned, well forecast, well plotted out, may happen sooner than people are expecting. The one thing that does unnerve the markets more than anything else is the rate of increase. So if you see, month on month increases in the interest rate, that starts to unnerve the market. But inflation needs to be contained, and there's a lot of work to be done around that. So, as I've mentioned already, just that one working order, slightly below the market, and a position in gold that I've been holding since yesterday. I think we traded up to 1795 yesterday, didn't take profit, had a TP in at 1796, and I'm still holding that gold trade. So we've got about 4.5 minutes now until the number comes out, and there's not a great deal of activity. I think there is going to be confusion around this number, probably more confusion than we've seen for quite some time. So I'm watching CNBC, and the contributors are about to give their forecast. I don't think they're of any great interest at the moment. I think the number and then the interpretation of the number. So if I have to take like I wouldn't trade the number, so I think we're going to see a very quick possible two-way movement. The number coming out, an initial reaction with some trading behind that, and then the number to be interpreted a little bit more fully, and possibly a reversal or a continuation of that movement. So I expect there to be two, not necessarily sharp movements after the number is announced, but two distinct movements, and then again another set of movements as we approach the opening bell in New York. So the markets are reasonably calm, reasonably still, no great movement in either direction, although you might not expect to see that for the next couple of minutes or so. After we've seen the number possibly traded, there's no reason for you to have to trade, and if you don't if you don't have a strong opinion on the market, then I would encourage you not to trade. But I do, I am definitely in favour of waiting for the number and then looking at what the initial reaction is, and then taking a decision from that point. The Dow has probably traded in a 5.10 maximum 10-point range since we've been talking. The one thing that I've noticed continually during the week, and I've spoken to you, I've spoken to a couple of you about this on calls during the week. The DAX is considerably better bid than the US markets, specifically the Dow. If you look at the DAX, we traded up to about 16,200 during the week. We're 220 points lower. The Dow traded up to 36,950, 960 during the week. We're a good 710 points lower at this particular point. So when I'm looking to sell, what that piece of information would probably indicate to me is that I'm better off selling the DAX than the Dow at this particular point. So the number's about 90 seconds or so away now, possibly a little bit less than that. And we're looking for the number to start to come through, and then see what reaction we get from there. So I'm gonna put the Dow up at this point. So this is just a 1 minute chart. You can see my limit bid there, well below the market, just above, just about 36,150. So I'd be looking for an 80-90 point drop. I think it's feasible. Probably. Looking, I think in both of the scenarios that we've spoken about, a good number, a bad number, there is a potential for a sell-off in both cases. But I think that is the perception we're seeing from a lot of people. So I have a question in there, but I'll leave that till just after this number comes through. But reasonably flat with everything. Dow trading there. 36,254, just picked up a little bit. So there are the numbers. So there you go, a bit of movement there. We went up, jumped up to 300, back down to 250. See how gold is reacting as well. So gold's picked up there a little bit, up to about 7. So 199,000, I think the number is. So a big miss there. So a big miss in terms of the numbers, less than the November number, less than half of the number that people were expecting. We've seen the Dow pick up a little bit. As I've said, I think there's an argument for this market to move in either direction. I seem to have lost the numbers there for a little bit. Gold has popped up slightly up there to about 1792, but I appear to have lost my connection for a few seconds. So I'm just going to leave that there, and we'll move on to the picked up a little bit. So we'll just take a look back at some of those markets and how they're moving. So gold is the Dow's fallen maybe 20-30 points since we were talking. The DAX is off a little bit. Gold is up to about 1791 and change. So not huge movements, and the Dow is holding firm currently. So I don't think we're going to go down and hit my bid at the moment. That may happen as we get closer to the afternoon or to the opening bell in New York. So fairly muted response to the number so far. Probably the gold coming off. Gold's probably shown a little bit more volatility around the number than the indices, which are fairly static. So just going back there to the results for the week, and then I'll answer the questions that are coming through. Solid returns so far this week. Probably, I think I have one or two trades to add to that. So somewhere north of 800 pips worth of profit this week. But it has very much been a roller coaster. There's been some big swings. Big swing in gold on Monday. I think the Dow's moving upwards on Monday. And some significant movements in the indices during the week, and also with gold. So the swings have been dramatic, and whilst I end the week posting a fairly decent return, I don't think that necessarily tells the story of the trading during the week, and it has been a particularly difficult week. So we'll see how that continues to go today. I see the Dow is continuing to tick down a little bit, but continues to find support. The 10-year Treasury note has increased to about 1.744, and gold is moving around a little bit at this time. So one of the questions coming through, just to make sure that I get to this, was about the technology stocks. And it just so happens I was speaking to a friend yesterday who's big into private equity, into technology companies. He works out of New York. Just happened to be back in Galway for the last couple of weeks or so. It's a difficult area at the moment. I think after the big fraud case that's come. That we've seen sentencing for this week, stories about that. People are a little bit more, or tend to be a little bit more careful around technology at the moment. Technology and those big growth companies don't like interest rates going up. Interest rates are going to go up. There's absolutely no doubt about that. The pace of that increase, that rate increase, will also have a significant effect on the technology stocks that come through. We're still seeing the Dow trading off a little bit. Nasdaq is down 40. The Dow is down a similar sort of number, or indicated to be down a similar sort of number. But it's the tech stocks that are getting hit, and you may see this theme continue for a while. We've got earnings coming up in the month of January. If the earnings start to show positive signs, that may signal a recovery for some of the technology stocks. But the big worry for the markets, and this is across the market at the moment, is Fed policy and quite how quick rate increases are going to come to the fore, and then quite how quick we're going to see rate increases one after the other. And I think that's the reason why you've seen such a big sell-off in technology over the last number of days. Continuing to see that sell-off today to a certain extent, and there is a degree of nervousness and fragility in the market. Nasdaq down 72, 75, so continuing to decline or move to the downside. So I think I've I've definitely triggered, or I should have triggered on my limit bid, and we'll need to monitor that going forward. So we'll just take a look back. I still haven't triggered on that limit. No, we didn't go quite as low as I thought we had. Gold has traded off a bit down there to about 1786.87. Might just look to buy some gold at this point, probably 1785, and see where we go. So I've just bought gold. I'll continue to watch that during the course of this afternoon. I think gold's gone a little bit cheap there. Not looking for too much of a lift before I take profit on that. Going to look back at the Dow trade that I'm waiting for. We've got very, very close. Hasn't quite triggered yet. So I'll continue to monitor that during the course of the afternoon. And of course, we'll update you with any trades. Likelihood is that bar the orders that are pending, bar the orders that I have in, I'm not looking to increase too many or add too many trades this afternoon. As I said, it's been a fairly dramatic week with some big swings, and closing the week out in positive territory is a key goal for this afternoon. So I don't want to get drawn in too much into any movement that we're going to see this afternoon. Bitcoin has traded off quite significantly over the last number of days as well. So I'll leave you there. If you have any further questions, please send them through. I'll get back to you over the course of the weekend, and give you as full as answer as I can. As I leave you, the DAX is trading at its low of the day, not quite down to my limit, probably about 30 points away in the Dow. Every chance that will get executed over the next short period, but I'll keep you updated with that. Thank you very much for joining me, and I'll speak to you again next